And John, thank you for being here.
Hi, thank you so much for having me. I'm really excited to be here.
Awesome. Yes. So first of all, I want to say again, thank you for being here. This is super exciting for us as a small finance community on YouTube. Obviously, not like the big leagues in terms of major media, but it's super fun to have someone like you, who's been a Wall Street Journal reporter for a long time, actually show up on the stream. So I want to discuss a little bit about macro and markets. First question for you, and you've talked about this a lot in some of your pieces, is that a lot of the rally this year on the S&P, I think up 15% of the year, has been because of the Magnificent Seven: NVDA, Tesla, Amazon, etc. My question towards the end of the year is, do you think the rally for those Magnificent Seven is able to hold, or do you think we have a rotation to the small and mid caps? Because a lot of hedge fund managers just feel like the run is the run for Meta. It's up 300% from the November lows, and there's not too much more that it can go for the rest of the year.
You know, it's such a good question. And it really does feel like we're at a turning point right now, right? With bond yields at some of the highest levels since 2008. So I think that's leading a lot of people to wonder, one, what does that mean for the broader stock market, but particularly tech, which does seem to be more sensitive to rising bond yields. And I also think a lot of this hinges on NVIDIA earnings next week. You know, what does that tell us about this AI boom this year? Stocks that have benefited from the AI frenzy. I think that's going to be a real test for that sector. But already the past few weeks, I think we have seen just a little bit of broadening. And I was looking at the different sectors early this morning. Energy up 2%, financials up, well, just a little bit, 0.1%. But we are starting to see some of that broadening in recent weeks, I think.
In your career as a business reporter, when you saw the NVIDIA spike in March, when it went from like 300 to 400 after hours, what was your raw reaction? Have you ever seen anything like that?
It was insane. I don't think I have seen anything like that. Well, actually, let me take that back. The NVIDIA pop was crazy, but to be fair, we have seen some huge moves in the FANG stocks, right? In Tesla, the past 2 years. I'm thinking of August 2021 for Tesla when that gamma squeeze was in play
Right.
and the stock just kept ripping higher and higher and higher. I think the past few years we have seen some of the biggest moves on record for mega cap tech. Last year it was moves lower, think Meta. This year it's been moves higher. So I think that again is what makes NVIDIA earnings next week so interesting, not just for AI, not just for that stock, but for the broader market as well.
Right. Okay, now Gunjan, although we've had a massive rally this year in the market, we've got 5.5 trillion dollars that are on the sidelines. Can you give any explanation for why you think all of these people have their money on the sidelines, and what catalyst do you think allows that liquidity to enter into the stock market?
So I think it might be tougher to get people out of those money market funds and get cash off the sidelines and into the stock market than it has been before. And there's one big reason for that. Money market yields recently hit 5.1%. That's the highest level since 2007. And it means this TINA trade, the idea that there is no alternative to stocks, it's dead right now. And that poses a risk to the stock market. And I think you're seeing people contend with that right now, where all of a sudden there are really safe and alluring places to park your cash that aren't the stock market.
Yeah, and it's really interesting. The idea that you could get 4 or 5% risk-free from the market versus having to take a bet on a company like NVIDIA to beat earnings, it is definitely attractive for a lot of people, especially in a market where people still feel inflation has not been solved. So speaking of inflation, do you think inflation is sticky enough to keep the Fed to continue to raise, as per the FOMC meetings yesterday that were a little bit more hawkish in terms of the minutes? Or do you think the Fed knows their job is done and they just want to make sure everyone also feels that inflation is getting quelled, but they don't want people to be overly excited, and as a result of that, they want to keep expectations low?
Well, for one, Amit, that's right. This is a really big shift from what we saw the past few years in terms of getting a return on risk-free assets or the safest assets around, right? Whether it's treasuries or money market funds. I think what the market is telling you, and the big trade this year has been a bet that inflation is going to keep falling, although very slowly, right? It seems like the soft landing trade has been all the rage this year after months, if not years, of fears about a recession and that hard landing. We saw, Wall Street take a really big U-turn on that.
Right.
So for now, it seems like investors do seem to think that inflation will keep falling, although at a slow pace. The one warning, of course, is that it feels like everything we thought we knew about inflation has proved incorrect the past few years. So there's definitely room for some curveballs to be thrown our way.
Yeah, this is the first time in my life I've been old enough to experience what 9.9% inflation feels like in June 2022. And I didn't even know the impact that would have on the market, like, because I was oblivious to what inflation really does. But now, as I've gotten older, I'm like, oh, this is not that good. So we want to keep getting this down a little bit more.
We all felt it, right? I think everyone did when you were buying, airplane tickets, food, Ubers, everything. But it does seem to be getting better, and that's good news for the economy.
Absolutely. All right, my last question, Gunjan. Again, thank you so much for joining us. This really means a lot to us. We have about 673 people that are here, excited for you being here today. Mm-hmm. You were in a Netflix documentary called Eat the Rich. Now, I didn't know you were in this documentary. I watched it, I think, a year ago, and then you popped up, and I'm like, that's Gunjan. She's from the Wall Street. And so you were there, and so it was super cool. Obviously, what happened in 2021, I think, even gave the foundation for someone like myself to have a bit of a presence on YouTube, because it allowed an influx of all these retail investors to actually care about the stock market, which when GameStop and AMC went to the moon. So how do you think investing has changed since 2021, and where do you think retail investing is going to go over the next couple of years, now that really tens of millions of people, at least in the United States, are excited about the stock market?
That's a great question. And I do think there has been a huge shift since 2021. And it's funny, I recently wrote this piece called Lessons from a Bear Market. And it was basically based on exactly this, which is what I think happened, which is a lot of individual investors, a lot of institutional investors too. I mean, I think everyone walked away from this bear market with quite a few lessons. Some investors I spoke with said, look, I'm taking less risk in the market after that big sell-off last year. I learned that maybe stocks over the long term have tended to go up, but there can be some painful drawdowns along the way. And because of that, one, I might be trading less. Two, I might be taking less leverage. Maybe I'm pulling back on the options trading. So many investors I was speaking with were broadly just taking less risk or more cognizant of the risks out there in the markets. Some investors I spoke with have also said that, they are being careful about what they're seeing on social media about investing in stocks, and then trying not to get caught up in like a momentum-based frenzy on individual stocks, which was a big shift. Some said, hey, I'm going to go into ETFs rather than single stock plays. So I think across the board, there has been a huge shift in how individual investors are positioning in the markets last year and this year. And I think it'll be really interesting to see how that evolves moving forward during this rally that we've seen this year.
And do you think the crowdsourcing of information that a lot of retail investors engage into around individual stocks will continue? I mean, we're seeing like hundreds of thousands of member communities popping up on Twitter or YouTube covering one stock. Do you think that continues as more people feel they can get information together versus having to buy it from reports?
It's certainly continued this year. I recently wrote about the rally in stocks like Tupperware or Yellow, and that was based on this crowdsourcing of information. And one thing for all the viewers out there to keep in mind, I love chatting with individual investors for my articles. So if you're ever interested in being interviewed, or you have something that you want to share with me, you think there's something I should be writing about, DM me. My DMs are open, and I love hearing from all of you. So would love to stay in touch with you, Amit, and for the viewers out there.
Right. And this segment is a exact manifestation of her DMs being open, because I sent her a DM and that's how we did this. Her Twitter is in the description.
It's true.
It's how it happened. It went down in the DMs. Twitter is in the chat. 703 people. Thank you for being here today, Ms. Gunjan. Thank you so much for taking your time. It really means a lot to me. Have a great day. Thank you so much.
Thanks for having me. Bye.
Bye. All right. That's it. We did the segment. Thank you, everybody, for joining. This was super, super, super fun. I hope you guys enjoyed. That was fun. That was cool, right? That was super, super, super dope.